Welcome back, folks. This is the second of a series of 20 videos making up the ICT Optimal Trade Entry Pattern Recognition series. And we're looking at the Japanese yen today, or specifically dollar yen. All right, so this is our daily chart, and I want you to take a look at this chart and consider what may be unfolding, why we're getting reactions, or why we would expect to see a reaction. All right, so we're going to take our fib from this low to this high. This is a swing low, swing high, intermediate term reaction price points. Low to high. Okay, and all we'll do is continue this out in time, and you'll see how price eventually trades into optimal trade entry for the daily time frame. All right, so if price were lower than this on this swing, we would use this low drug from here up to here, but you want to work with what range you have available. So in the yen on the daily, we know that we entered into or below the 62% retracement level 3 days ago. And yesterday, or Thursday's trading, we pierced the previous day's high, or Wednesday's high. Look at the high. Here's right here. Look at this number here. Wednesday's high comes in at 106.629. Thursday's trading goes to 106.657. So we went above Wednesday's high. We could potentially be seeing a turn or an expansion on the upside. It's already shown a willingness to go higher than the previous day's range. So now we're going to look at Thursday's high, which is 106.65 and 7 pipettes. Okay, so that's our level. Now we're going to drop down into a 5-minute chart. All right, so here's our dollar yen 5-minute chart. I'm going to give you a moment to take a look at this. Pause the video and study what you think you see here. And when you're ready, just unpause the video and watch the explanation for the pattern recognition example for today. Okay, so here's what we're going to do. We're going to take a look at the annotations for today. Here is the previous day's range. And the previous day's range is defined from here to here. So we're expecting a run above the previous day's high. So here's previous day's high at that 106.657 level. And we're looking for a reason to get long to target this high. And we can see from the previous day's range, we have this low up to this high. And then all the way over to our New York session time from 8:30 a.m. New York time to 11 a.m. New York time. You can see the vertical lines as I outlined yesterday. We'll take these off to keep things clean. You can see how price drops down into it here. And we're going to assume that 106.314 is that 62% retracement level, so we're going to just round it to the nearest 5 pipettes. So 106.315 would be our entry. Below the low, our stop will be at 106.215. So it's a 10 pip stop, optimal trade entry. Old high that makes the range of the fib comes in at 15 pips. So it meets our minimum criteria for the first scaling. So you could take profits there. Second scaling for around 25 pips here, and we're still below the previous day's high. The next level at the fib, which is a 10 level, is nice because it's above the previous day's high and it's a 10 level, so we can take a third scaling out there for around approximately 40 pips. Additionally, you can see this swing here from this low to this high being 1, 2, 3 for another optimal trade entry, because you can see the low comes in just at 10:55, so it's 5 minutes before the end of our New York session for limited of time. And you can see we run this old high here. So from here to here, that's another opportunity you can study on your own and annotate your chart. And you can see where we closed for the day. Hope you found this insightful. Until next time, I wish you good luck and good trading.